Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, China and these commodity prices, wow, well it's turning into a bit of a rout at the moment, and we're seeing some significant pressure coming through on the sell side coming through these markets. Over the weekend there was no action from the PBOC, and that's what the market had been anticipating. The market thinks that the PBOC is going to be doing some sort of easing measures, and it didn't get anything over the weekend, and then hence we saw significant pressure on the downside in Asian trading on Monday. That has driven European markets lower, and that sentiment in terms of a flight to safe haven assets continues to flood through the markets. We're seeing the likes of US Treasury yields sharply lower. Those Treasury yields, got the chart there of the 10-year. That 10-year Treasury yield is now, or hit back below 2%. That was a big low on the 10-year, and it's sort of, I think, reflective of the fact that not only are we seeing concerns over future growth prospects in the States, but also I think concerns over whether we're going to get a September rate hike. I think a September rate hike pretty much is now off the table. I've been saying that for a while, that I thought it would be December. I may now even have to question December, because I think that the impact that we're having through these commodity price sell-offs are going to be significant potentially on the FOMC, which is historically dovish at the best of times. Jackson Hole this week, I've made a bit of a mistake I admit last week, got my weeks mixed up, but Jackson Hole is this week, and we're going to get a load of Fed speakers at that Jackson Hole Economic Symposium giving us their latest views on the monetary policy, and considering how dovish the Fed meeting minutes were last time out, in addition to the deflationary impact of the devaluation from China and also the current commodity prices falling sharply away. It'll be very interesting to see what these Fed speakers have up their sleeves this week. So, in terms of forex markets, we are looking out for some significant changes actually, and we've had these significant changes coming through since those Fed meeting minutes last week. And the dollar has weakened, and there's been a big unwind of that euro carry trade. That euro carry trade that was pushing the euro lower through the first half of the year is now sharply unwinding as the expectations of a September rate hike are reduced, and that's pushing the euro strongly higher through that 1465 crucial resistance. That is the sort of 2015, I suppose, high back from June, but certainly that is the big resistance in place, and that got broken on an intraday basis, and we see that closing above that level. That is a big sign that perhaps the euro continues to go higher. Cable's a difficult one because it's sort of not really making it. I think that the commodity price pressures that we're seeing are making the market question both the Fed and also the Bank of England, what they could do there in terms of their monetary policy. So there's not really too much of a movement on that cable, although the weaker dollar is just slightly meaning that cable is pushing higher, but not convincing by any stretch of the imagination. Big safe haven flows into dollar yen, pushing that yen strongly higher, and the dollar yen pair strongly lower. 120.38 was the big support. Get a close below that, we could well be back below in towards the sort of low parts of where we were trading around in early 2015. That would take you back to sort of 118.30 to 118.50 sort of area potentially. And the commodity currencies, well, across the board, they're under pressure, but mostly seen through the Aussie and the Kiwi at the moment. The Aussie and the Canadian loonie. Kiwi has been holding up reasonably well, but still on Monday that Kiwi is now beginning to come under pressure. So in terms of equity markets for indices, well, we are seeing the equity markets sharply lower on Monday, and we're seeing that the DAX, for example, is now into bear market territory, down 20% since its high, and the move has seen the DAX go very oversold actually, and pretty much a theme across the equity markets. Strong downside, but now they're looking pretty stretched. DAX is oversold, S&P is oversold. S&P RSI is actually the lowest now since May 2012. Also, the FTSE 100 is sharply down now into that support band around 6,000. It's incredible that that the FTSE was up around 7,120 only back in April. So, in terms of the commodity markets, well, as I said, there's a little bit of a dichotomy actually going on. You've had this gold price rising sharply, but also the oil prices and the base metals are sharply lower. So you're having this dichotomy going through the commodity markets. Safe haven gold is still supported. It's just started to go a bit sideways perhaps, and could even see a bit of a correction, maybe a bit of profit taking coming through. But certainly oil is under pressure. Oil in terms of WTI and Brent crude are both sharply lower. They're now at 6.5-year lows, back to levels not seen since 2009, early 2009, and also now only not far off, sort of just under 10% just 10% above where they were at their nadir in 2008. So big moves there, potentially still to the downside if those momentum trades continue to go. So for the economic calendar this week, mostly focusing on the US data, but we start off on Tuesday with a little bit of German data. The German IFO business climate comes out, but then we focus quite squarely on the US, and we're looking out for consumer confidence in the States. Now this is interesting because we had a sharp decline in consumer confidence last month, forecast to come back for a little bit, but it'd be very interesting to see if these surveys start to take account of the declining stock markets that we're seeing. And also we've got new home sales as well, forecast to be about 0.5% higher on the month in terms of the annualized data. And then we're looking out for durable goods on Wednesday, but main focus will be Thursday with the GDP for the States, the second reading of GDP actually expected to be upgraded from the 2.3 up to 3.2 there on the GDP for the annualized number. And then into Friday we're looking more at inflation. We've got the Japanese CPI, which is expected to just come off again, actually back towards sort of flat on that inflation data. And then we look at second reading of GDP for the UK, but most importantly of all, we've got the consumer price expenditure for the States, and that is expected to stay flat on the core data. The core number is expected to stay flat at 1.3%. So very interesting there. So lots going on again this week. Jackson Hole as well, so remember that. But in front of that, I wish you good luck in your trading, and I'll speak to you again next time. Thank you.